This is Franz, the TrendTrader.com, and let's take a look at what the markets look like in December. We're gonna have one last weekly recap for the end of the year to check out how 2017 went in regard to trend trading. Other than that, you're probably falling asleep here listening to me or watching these markets from a trend trading perspective, as everything just keeps on moving. Nobody believes it. That's why it keeps on moving. When you take a look at the euro yen, you see the marked breakouts on the weekly chart. This is where we went in and we are staying long. The past 2.5, 3 months didn't do anything up here. As you can see, we're staying above our balance zone. The balance zone, usually the area where price wants to be if there is no new incoming information, simply meaning you will not get a trend moving from one level to the next price level where you have hundreds if not thousands of pips in between, because a fundamental change, a fundamental price change took place. In the euro yen, we are still in that mode where we're moving down or from down here somewhere. It's never possible to really define exactly where lows and highs are, even though in the aftermath you can always see it. But we're moving out here from the 115 area. We're now up to 133, and it's my guess that this will continue up. You just have to have that patience to stay in the trend, to stay with your initial position and even with your add-on positions. As long as the balance zone is opening up, meaning the moving averages here are indicating a trend. As I've said many times before, these things are our trend lines. We do not draw any trend lines because they are linear trend lines. In my opinion, no market is moving in a linear way at any time. Therefore, drawing linear trend lines is pointless. We are sticking with these moving averages, and as the price comes back into them, you know that major support and resistance levels are hit, and you can act accordingly. As you know from my trading system, I'm always waiting for a fractal to be formed inside of that balance zone, and that's where the stop goes. In the euro yen, we do get a new fractal here for the week. The low is this one here, and when prices are closing out this week, we have a new stop right below here. If the market chooses to come down below it because it can't put up new momentum, we just stop out and we take our profits for those three positions which are in profit, even though when you look closely, the third one will be closed out with a loss, a small loss, if we stop out below this bar right here. So euro yen in a trend, and we keep on holding this position as it moves upwards. We bought this a long time ago in May, and we're still staying long. Most people are not able to hold positions for that long, and that's our edge. Euro Swiss franc, same situation. We are long ever since prices broke out from down here. Even if you didn't catch that, your major breakout is right there. Also triggered in the middle of the year here in July, and ever since then we have been moving up, and this is what we're doing until now. No way of determining when this is going to end, how far this is going to move, and all that sort of stuff. We do not have any price retracements back into the balance zone, no fractal formed inside the balance zone ever since we entered this. Therefore, we just hold the position and stay long. Very easy stuff. So easy that people can't do it. Now, US dollar Canadian, we have a new situation going on. We are taking this long as we come and break out. Probably this year, past or in the last 2 weeks, trading weeks of this year, we're going to see that being hit. And our stop is below this week's candle, and we'll just see where this goes. Remember your risk management. You never enter with more than 1%, even less on your initial position, and when you see it moving your way, you can add on to this relatively small trade that you put on as the first breakout is being hit. Very nice setup here in the US dollar Canadian, in my opinion. The same idea we have already been trading in the US dollar yen. I went long above here. I stayed in a drawdown throughout the past 5 weeks, My stop was below the balance zone, which was never hit. Now we are turning around. My stop is now below here, and I'm waiting for this to continue higher. Again, you really need patience if you want to trade the weekly charts, if you want to really catch the bigger part of a trend. If you trade dailies in a situation like this, you're gonna have a lot of entries being triggered, but immediately you get stopped out because there's so much noise nowadays, even on your daily charts. Weeklies perform the best if you are a trend trader. You are in the trend for about a year when it goes well, and in that year you can really make a difference in your account. We're talking 30, 40, 50% of gains if you play it right, if you add on, if you are able to follow your strategy, which is the biggest problem for most people, that once they are in a losing trade, they exit it, then it turns around, or once they are in a winning trade, they exit it too soon as the market continues higher. And this is pretty much the story in the S&P. I did not modify this chart here ever since I have been talking about this breaking out in November of 2016. We have been holding these long positions, all three of them indicated here with these black breakout lines, since November last year, which is 13 months now, and this is still moving higher. Nobody believes it, that's why it's moving higher. If you are able to detach your emotions and your thoughts and your fundamental understanding of economy and fundamentals in trading in general, you're very well able to stay in a trend like this. Major people, Tom DeMark and I don't know what they're all called, have said that the top is in, and they have said this for years now, and they are so wrong. Um, you're better off trading your own system, your own thoughts, so to speak, even though you shouldn't trade your opinion, but you should trade your own thoughts in the sense that you have a trading system that reflects what you think about the market, and therefore you should choose your system wisely so that you can actually get from the market what you want. In my case, that is long-term trends. You might be different in that regard. You might be looking at 4-hour or daily charts where you just trade in and out of huge trends like this. Still, an S&P trend like this I have not seen in my 12-year trading career yet. Very happy to be in this. One of the few people, I guess, who are able to hold stuff like this for a very, very long time, and that's where the profits are coming from. I don't see this ending this year. It's only 2 weeks left. The trend is probably going to continue for quite another while. You can see the momentum picking up speed again. Should it rise above this momentum high here, what it means is that you still need divergences to be established before this trend can end. And once it makes a new high here, it just tells you that you're so much further away from the end of the trend because there is no divergence forming yet. So far, we assumed that this is the momentum high and we get divergences as the market moves higher. But with this much momentum coming in here at the end, what we thought is the end of the trend, therefore we don't count waves because you're always going to be wrong in your wave theory. When you count, you just want to follow along with the market and you want to let the market tell you in which wave you are instead of you telling yourself which wave the market is in. Doesn't make sense in my opinion, because here you would have exited probably here or maybe here because you thought wave 5 or some internal wave 5 is over. But in my opinion, wave counting just doesn't work. Therefore, we follow the price, and the price is always going to be the first indicator showing you what is going on. Everything else is just theory. And here it shows us very well how theory fails you, because you would have exited at these points if you just follow the price and follow the momentum. You also want to try and determine where could these waves be and where are the divergences, when do we expect a bigger correction, but you want to let the market tell you that. The market should first stop you out before it can tell you that this wave or that wave or whatever you want to call that stuff, market phases, is over. And therefore we are still in this market, one of the very few people I think who is able to pull that off simply by waiting. Same is true for the Japanese Nikkei index. What more do you want? We have breakouts down here marked by these black lines. And I've also written down, and this is a long time ago as well, that I wrote this here, weekly entries as mentioned in videos since the beginning of 2017. And that's exactly what happens. You have your breakouts, the fractal has never been hit that is formed inside the balance zone, and look at where we are now. We are just trading here at a major resistance level, but the price is not crashing back down into this whole sidewards movement. But the characteristic of what is going on in here, especially these last 3-4 months, really show you how much momentum is in here, and that this Nikkei thing is in a bull market. And let me just remind you that the monthly chart is really the one you should be paying attention to. The red line was the resistance of the past 30 years. That is the most important resistance in that base here. And now we are trading above it, and we're closing above it, and we're staying above it. Momentum is building too. So in my opinion, Nikkei definitely up for a lot of more upwards action. You just have to be able and wait for this. And don't screw with the market, don't screw with yourself, with your positions by entering and exiting and all that kind of stuff. You just want to hold and do nothing. DAX, already mentioned this one. We took entries down here as this was correcting. Even if you didn't and you bought this breakout here, you now have a failure at the green line, which means market is in an internal correction. We will not see this drop down further where we have to exit longs. Nope, what we are doing is we put on new longs above that all-time high at 13,500, and this will probably zoom much higher as well. Nobody believes it, that's why it's gonna probably do it. And here you have your momentum being built up as well on the monthly, and as you can see, the monthly is beautifully trending to the upside, staying above the balance zone, and we just follow the price, and that's it. Our risk is always adequate, and therefore we're never scared or emotional about the position itself, and therefore we have no problem waiting for the market to unfold and to really show you that the trend is going. And waiting for a month or two until the price is heading higher is not really a big deal if your position size is small enough that you couldn't care less about if it goes your way or not. And if you then wait long enough, as it turns out on these weekly time frames, very often your position will be in the direction of the market as the market continues trending in that direction. But of course, it's going to need some time in between. Nothing moves in a straight line. You always get these setbacks, and they can take a long time. They can be very quick, and that's not really up to us to judge anything there. We just have exit signals, and if they are hit, we get out. If they are not hit, and we have a strong close here again for the week, bouncing off the green line, the short-term support in the DAX index here at the moving average, we just hold this long, and we're very happy to see it next week probably moving higher again. We get a new stop, and then maybe our new long position will get triggered, and we'll just hold this into 2018 later on. Don't forget, next market we're looking at, New Zealand dollar, Australian dollar. Very slow so far, trading on the same price levels for the past month, but it's still a short. We are short, we are holding these shorts. It's not up to us to judge whether we like this, whether we don't like this, whether it's moving fast enough or not. The market has told us here that it wants to go lower as this fractal broke, so we took it lower. We are still expecting targets down here. How fast and in which manner the market is reaching this level is not up to us. Australian US dollar, same thing. Fractal hit. We're now waiting for this to get lower somewhere down here before this turns around and might become a long position. That's it for the week. Trends are still running. We have stuff that we've been holding for more than a year. We're looking very good on the trading account for the year. We've even taken some profits, as I mentioned a couple of weeks ago, in the Nikkei for add-on positions, which was a nice gain for the year, but we're holding the core positions as well. And we're always trying to get into new stuff that we can hold for a long time, which means 12 months or so, to profit from new trends, to add up And if you can wait, and if you have some other hobby except for trading, then you realize that looking at markets at the end of the day, at the end of the week, is well enough to be on top of people who get caught up in every tick, who get emotional by every little 5-minute chart movement, and they think that the market really did something today, but they are missing out on the whole overall trend that is really happening. But if you can apply this kind of Zen Buddhist, if you want to call it that, philosophy in your trading and really accept that the market is telling you the direction it goes, and you really have the patience to wait for the market to prove this direction to be right or wrong, then very, very often you will have, it's not that you will have most of your trades being winners, because most of your trades are not going to be winners, but the percentage, the relation between your winners and losers is still going to be skewed into the positive, which means you're losing just very little amounts of money on your losers, but you're gaining a lot on your winners. Since you don't have take profits in trend trading, what you get is an open-end possibility of massive price gains in your account, but to the downside, you're always protected. And you're really managing your money in your account in this regard. So there are no positions we put on with a 10% risk or crap like this. We always take it slow, we take it in small sizes, and over time, of course, we can build something. It's very tough to stick with the market and this trading philosophy, especially at the beginning when you start out trading and risk managing in this way, because it feels like you're never gonna get anywhere, and it's much more satisfying to trade a 5-minute chart, and at the end of the day you can see where the price went and how much money you made. But give this some time, and after 2-3 years, compare your performance in this trend trading, long-term trend trading approach to the people who collect the breadcrumbs and who sit in front of the chart all day, who don't have a life. The results are going to be worse for them, simply because they are unable to let the market flow. But making money in the market, and this has been said by Bill Williams 20 years ago already, you make the money by just sitting and waiting and having patience. You don't make money by actual trading, by putting on positions, taking off positions, blah, 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 blah. That's not how you make money. You make money by opening something and sitting there and waiting for it to develop. It's not that it happens within one day or anything like this. Also, don't get scared by Twitter and people on Twitter who think that they have a very high regard in the financial trading community, as they keep calling tops, or as they get emotional, or as they say that this is all a bubble. Let them do their thing. They are the people who give you your money, because they can't follow the market right. And I'm guessing the old statistics of 95% plus being wrong, not making money, still applies. And if you want to be one of those 5% or even less who make money, you got to do some stuff that nobody else is doing. And I think that waiting is one of those things, because I don't see anybody waiting. I only see people every day judging and getting in and jumping in and then pulling out and then being pissed or not being pissed. Doesn't work. Doesn't work that way. Also very interesting, on Sunday they will be opening up with Bitcoin futures at Globex. Bitcoin now trading at, I don't know, 15,000 or something like that. Insane chart. If we just take a look at this here, absolutely insane. Rarely did I see a chart that moved so far away from the balance zone, that is so overextended. Remember, even if you have something that is hyped like Bitcoin, the basic philosophy of any price movement, it doesn't matter if it's a stock, a currency, or a new asset class like crypto, who knows, it will always do the same thing, because the basis of price movements is always the psychology of the people who are trading it. And when you see something like this, you just know that at some point it will hit that balance zone again. If you're following the media. People seem to get to know some stuff about Bitcoin, and people want to buy the Bitcoins. And if you are a little bit experienced and you look at this, then you know that this is no time at all to buy Bitcoins right now. Now, this doesn't mean that it might be a mistake in the sense that, you know, at the end of 2018, Bitcoin is going to hit 100,000 or something like this. But still, you don't know that. It might also be down to 100 and you bought the top and you lose your 15,000 that if you would buy now. So that's just stupid, and that's emotions, and that is being affected by the hype. And that is exactly what you don't want to do, and these are the people who are not going to make that money. Um, you're just going to make that money by being lucky enough to have the education to be able to buy Bitcoins, which of course now is too late, but when it breaks out on top of a level like here or down here. But if you haven't done that at these levels because you didn't see it, you didn't know about it, or you were too caught up in yourself, then it's just a lost chance at that point. Remember, life is not over tomorrow. There are going to be plenty of chances all over the place. You just got to set yourself up and diversify well, and then there's not going to be any issue in that regard. But jumping into this right now would not be a good idea in my opinion. That's just my opinion, of course, but that is not smart. It's much smarter to wait for the market to present signals to you, to present opportunities to you, and then you follow that stuff. So US dollar Canadian, US dollar yen, add-on positions in indices, that is what we're looking at, and that is what's probably going to move. This is also going to move, but not in a manner that is, well, consistent, or that is reliable or stable or something like that. I don't know if these are the right words, because when you look at this, it does look relatively stable. We just a couple of pullbacks here, so what? They don't even hit the red line of our balance zone. It's not even a big retracement, but still, the momentum in here, the craziness of this market has more to do with a huge bubble forming than it has to do with continuous price movements to go to another fundamentally necessary price level where this price needs to be. Now, this is all opinion, and nobody knows what's right or wrong in the market, but it is exactly because of that why you need your strategy, and why you need to know when to buy, how much to buy, and especially the most important part, when to get out. Now, hopefully that helped a little bit. Hopefully these videos and the trends that you see me posting here are a little bit of an inspiration to more short-term people looking at the long term, finding some instruments they can use to participate in the long-term trend, because I think it's much easier to make money this way. Just have to overcome the patience, and over a period of 5 to 10 years, you can really make a difference in your account, compared to being hyped, sitting in front of your screen for 2 or 3 years, losing all your money in day trading, you know, because retail is not set up for this correctly, in my opinion. But that's just me. Hopefully this helps, and if you have any question of how I look at this, or how to trade this and why to trade this, post a comment, like the video. That really helps. Thanks a lot for watching again, and I see you soon.